without further ado, I'd like to kick the ball over to Brian Crane, who is he's one of our product managers within the carbon side of things. He specifically covers the West Coast, so that's going to be basically the Pacific Northwest all the way down through Mexico for Ryerson. He's going to talk to us about what he's seeing within the plate markets. And the other thing I'll note is, for any of you who have questions about, mill discussions, lead times, anything he's seen in the physical procurement world, kick those his way, because he's going to have a much better insight into that than I will.
Thanks, Nick. Carbon markets have been, I think the best word to describe it has been crazy for the past couple of years, and we're seeing the definite opposite effect of what we saw. Now we're trying to find the bottom, right? And you and I have had these conversations, and I still think that right around 800 is that good floor for hot roll. If we want to talk specifically about the spread between plate and hot roll, I think that one thing that has kept plate prices a little more elevated has been the robustness of the end market users that plate goes into. So specifically, wind tower consumption has been high. We've started to see a few of the first stage infrastructure projects be let. So bridge work, highway work has started to come through. If you're a West Coast resident, you'll understand that water transmission is a huge concern for us now. So we've seen a lot of water transmission projects come online, and those types of projects are keeping the plate mills busy. We did see somewhat of a correction over the past week with plate prices coming down a little bit, but they're still at a level that is historically quite wide over hot roll coil. And for now, we can expect those to kind of level out at these new levels and be at that stage for a while.
Hey Brian, real quick, I mean, you talk about some of these infrastructure projects coming on and things like that. Would that indicate that these prices could stay high for a while? I mean, with some of these things just getting ramped up.
Yeah, I think they could stay at the new level that they came out at this week, and they could stay there for a while. I think what the mills are trying to make sure that they do is they're trying to stay in competition with what's coming in offshore. I think that's something that a lot of people that live on the coast have dealt with over the past couple of years, is that the import price has varied drastically with what the domestic producers are doing. But with infrastructure projects, a lot of that has to be domestic melt and manufacture. So that's going to keep the domestic mills busy. And I think we've seen that come to fruition.
Hey, Brian, question for you. So on the sheet side of things, obviously, there have been a number of different analysts who have talked about the coming sheet storm, or said a different way, just the additional capacity of carbon mills that are coming online here in the coming, let's say, 6 months to a couple of years out into the future. Is there much capacity being added in the foreseeable future on the plate side of things?
Actually, no. There has not been as much investment in plate mills that we've seen. Some of the new carbon flat roll mills are going to make sizes that are close to a plate size, but your traditional plate mill plate sizes have not seen the kind of reinvestment that the flat roll side have.
Interesting. Yeah, which I think is fascinating as we look at this chart and consider what it means, because ultimately this is looking at spot hot roll prices relative to plate. And you can see on a historical basis, they've been pretty darn correlated. Sometimes hot rolls at a premium, sometimes plates at a premium, but generally they're moving somewhat in sync. But we've certainly seen that massive deviation. And I think certainly the end market demand on the plate side linked to infrastructure and wind towers and things like that can certainly play a role. I think the other thing that can play a role is just what we just talked about, which is on a relative basis, there's just a lot more capacity coming online within sheet that could keep that premium for plate, maybe not at $1,000, but certainly more elevated than where it's been in the past.
Yeah, it seems that every flat roll mill and every flat roll mill group has added 1 to 2 mills, or they've added capacity at mills. There's only been one new plate mill that has been under construction, and that's Nucor's new mill outside of Louisville, Kentucky, and that is expected to melt its first ladle of steel sometime in Q4. So only one new mill in the plate market is coming online. So it's going to have an effect on the market, but it remains to be seen what that effect will be. It's certainly not to the scale of what we see in flat roll.
Got it. So to put it into perspective, I guess relative lead times, how do they look in comparison between sheet and plate at the moment?
Hot roll lead times have contracted quite a bit. It's anywhere from 3 to 5 weeks. Plate is still in that 6 to 8. And if you're talking about heat treated plate, you've got some extended lead times there, and you've got a much tighter allocation source with heat treated products. But you've got a few weeks in between those two products. Hot roll relatively fast if you need it.
Excellent. And Brian, you mentioned the idea that the domestic mills are trying to keep in close step with foreign competition, import numbers. This chart, I'll let you speak to it, but ultimately it's the price of foreign products. So the blue line is going to be European plate prices. The white line is going to be U.S. plate prices. Again, you notice there typically is a somewhat of a correlation there, but go ahead and speak to that one if you like.
Yeah, I think it's a great slide to put in perspective the effect of the Russia-Ukraine conflict. One of the largest plate producing countries in Europe is Ukraine, and when that conflict kicked off, it really put a hole in European production, and European customers were scrambling all over the world to figure out how to fill their needs with that giant hole being taken out. I think it's somewhere in the region of 30% is what Ukraine supplied to the rest of Europe. So we see that giant whipsaw effect at the beginning of that conflict, and then it kind of came down as they found sources to import out of Southeast Asia and other parts of the world. But the high energy costs that you've been talking about have led certain mills to take a second look at what kind of production levels they're going to be at. And I think we've seen a lot of cooling in that Eurozone economy, as you brought up earlier, which has led the plate production needs to kind of fall off a little, quite a bit. And, for the first time in a long time, we've started to see actually a couple of import offers come out of Europe. And it's been a really interesting plate market to have to work in this year.
So we got a few questions rolling in from the audience here. Brian, do you know the apparent demand for hot roll carbon versus supply, and the same for plate? So the supply and demand on both of those.
Ooh, that's a tough question to nail down. I'd have to go back and check with some data points. I'm not sure that I can come up with that off the top of my head. Sorry.
Our listeners put you on the spot. Sorry about that.
That's okay. That's okay. We can come back. We'll get some answers.
And another one here. How much tonnage and when do you estimate significant new flat roll capacity coming on stream in the U.S. market?
I think we're going to see some of that come on at the end of Q3, and definitely we're going to see it in Q4. And it's not just in America. We're going to see a new mill come online in Western Mexico. So last year, Ternium, which is based outside of Monterrey, put in a new electric arc furnace, and we've seen production from that mill come on pretty hot and heavy. And this new mill, which is located in Baja California, will start producing full scale probably around September, October. So we've seen additional capacity at mills across the Great Lakes zone, and the brand new mill that Steel Dynamics has built in Sinton outside of Corpus Christi. So I'm not sure of the number off the top of my head, but it's a significant amount of new carbon flat roll capacity coming online. And also we've got mills that have added capacity, whether it's installing a new galv line at various facilities across Nucor, or it's an extra furnace here and there at places like Big River in Northeast Arkansas. We've seen quite a bit of new capacity come online, and Nucor is still in the beginning stages of building a new mill in West Virginia. So a lot of capacity coming online.
How much does auto impact hot roll?
Not to make it into a pun, but automotive drives the steel market, and it's
well done.
It's been the automotive production levels have been cut so hard this year that the absence of automotive is really being felt by what we see in hot roll pricing and what we see in capacity utilization at the mills and what we see as far as lead times. If it seems like every week we get a new news alert about another automotive production facility either being idled for a while, or they're going to take out another 5,000 to 7,000 units in a month. And the last time I saw a overview of how many automotive units we're not going to produce this year, I think it was close to 400,000 automobiles that are not going to come into production this year. And the amount of steel that's consumed by automotive is the vast majority of the overall market. So it's been a massive gap that automotive has left.
Yeah, it's interesting you note that. I actually listened into Cliff's earnings call just I think it was last week, and their CEO was pretty optimistic. Well, he's obviously recognizing that it's been soft up to this point. The outlook, he believes, and granted, he's talking his book a little bit, maybe a lot bit, because they're very heavy into automotive. But his outlook is pretty optimistic for automotive production demand over the next 3 to 6 months. It sounds like, which I think kind of lends that hope or that possibility that maybe the chips issue is beginning to improve a little bit.
Yeah, that is welcome news if it comes true. I hope he's right.
Excellent. Well, Brian, we're going to have you stick around unless Mike, are there more questions?
Yeah, there's one here, and what will the impact on price be on hot roll carbon based on the new capacity? So with all that capacity coming online, does that mean lower prices? I mean, where does that go?
It's a possibility. I think that what we've seen after these past couple of years is a reset on what raw materials input costs are going to be and what they're going to be in the future. And a couple of things have to happen. Automotive, we need to see what happens with automotive, and we need to see what's going to happen in other sectors. We see good demand across a lot of different end markets. I don't see just a complete pitfall where prices go to pre-2020 levels, but I think it's going to be interesting to see how all of that new production plays out. I think there's also a decent chance that some of that new production is going to find home outside of the United States and even maybe outside of North America. Just because Ternium put on a brand new mill, all of that production is going to be they're exporting to the Eurozone, they're exporting to Southeast Asia, they're going to South America. So it's not, and the Mexican domestic market has been fairly strong and remains to be. So it's a guessing game, and my crystal ball is unfortunately kind of foggy about that. But Nick, you may talk about it here in a minute, but the reset on raw material inputs plus what a mill can call a break-even point at production levels is going to be higher than it has been in the past.
Yeah, I think that's a great segue into my next slide. And Brian, we'll have you stick around till the end in case there are remaining questions. But appreciate all the intel thus far. I think it's a great segue into this chart, which we did talk about last month, but I think we certainly want to revisit it because it touches on that last question, but it also touches on the question of where might prices bottom, where could we potentially see something trough out and maybe rebound a little bit. What we're looking at here is going to be, to Brian's point, essentially the raw materials plus some margin that electric arc furnaces want to achieve when they make steel. So the yellow line is going to be scrap prices plus some theoretical spread of labor costs, energy costs, logistics, and their own margin, which we're kind of labeling $300. So scrap plus $300 gives you that trajectory of what the yellow line's showing. So, as we're watching the CRU as we sit here today, dip down into the low 800s now, we're beginning to close that gap on a spot basis between where the mills are happily selling steel and where the current spot numbers are. So, and when the one thing that we have not seen in the last 2 years is contango, which simply means upward slope in the futures curve. We haven't seen the futures curve look like this for certainly the last 2 years, where you actually have front month or spot prices lower than where the market believes they're going to be several months out into the future. And you can see that based on this curve. So, if we're using the futures market as a proxy of predictions, the futures market's kind of saying in the next, let's call it 45 to 60 days, that prices are going to trough out. And all of this kind of centers around this idea that at some point, the domestic mills, if they see prices go too low, they'll start to ratchet down on production because they aren't making as much money as they want to. The other point I would make to that question about does additional supply bring down prices? All things being equal, absolutely. If you have more steel supply coming online, all things being equal, that should bring down the relative price because you're adding more supply into the market. However, counteracting that, we have to consider the fact that if you're making more steel, where are you getting the raw ingredients from? You're making more steel from scrap. Well, scrap prices probably got to go up a little bit, or at least demand for scrap needs to go up, which probably tightens that market a little bit. So you do have this interesting push-pull dynamic of these new mills, these new electric arc furnaces that are coming online. Yeah, it might be a little bit of a dampening impact to the price of steel, but it could be cost supportive to the price of scrap.